Hey, YouTube. Yeah, I've been missing again, but I've been doing some really dope stuff. But what I want to do is come to you guys today with a couple of tips for saving money, okay? And the reason why I'm doing this is because I actually had someone in my group, the Creating Wealth Society, pose a question about saving. So I think this is a perfect time to actually give you some tips about saving money because we're about to embark on a new year and a new decade. So I'm going to give you 3 things that you can actually do to help you with saving if you can't already. Okay. So the first thing in regards to saving is you want to take inventory of the cash flow that you have. So you want to take your income, whatever your income is, take your income minus all of your expenditures and then see what that bottom line number is, okay? So once you have that number, if you're finding that it's hard to save, then that means that that bottom line number, the money that you have there is just going everywhere, okay? It means it's not, it doesn't have a purpose, a budget. You don't have it budgeted out to where a certain amount goes here, a certain amount goes there. And if you do have money there, or I'm sorry, if you do not have money there, or very little amounts of money there, then that means that you are over leveraging yourself and you need to cut back with those expenditures. And then you also need to figure out a way to bring in additional income, okay? So the first thing is take inventory of where you're actually at as far as your cash flow. Now, once you determine your cash flow, the second thing is you want to create a working budget. Now, I've actually found budgeting to be quite easy for me, and that's because I do what's called a dual bank account method. The dual bank account method is where I have 2 banks, okay? Not 4, but 1. I have 2 banks, and with each bank I just say, well, let's just say I have one. Let's just call this bank A, okay? Then I have bank B. Bank A is my primary account. I have a checkings account here, and I have a savings account here, and I also have a checking savings account with bank B, and then I have a money market account over there as well. So with that primary account, what I actually do with that primary account, the checking account that I have there, that's where my primary check goes into, and I only pay bills from this account. Okay, so I don't commingle funds. I don't mix my business account, or I'm sorry, not business account. I don't mix my bills with any leisure, okay? So I don't commingle those funds. It's strictly for paying bills out of. And the savings account that I have linked to that primary account, or bank A, is for what I call a buffer account. And I'm gonna explain that in just a second. But with my secondary bank account B over here, I have anything that I have to pay for on a monthly basis, such as groceries, gas, and I also give myself a little what's called a little splurge account. So if I want to go out and I want to spend some things or spend money on some things, shop a little bit, or whatever the case is, I have a little splurge account. Now what I do is I allocate a specific amount towards each of those categories, and that goes into checking accounts B. Okay, so checking account B, I take that debit card out only, and I shop with that card. So I know I have to swipe for gas for a specific amount. I know I have to swipe for groceries for a specific amount over on that side. Okay, now let's jump back over here to the main account with the savings account. Now what I put in that account is called a buffer account, okay? So a buffer account is another way that you can actually start to save money, because you're actually going to set aside money every single month that's due on a yearly basis. So that's what the buffer account is for. Now the top 3 things that people use buffer accounts for are vacations. So there may be a vacation that comes up on a yearly basis, birthdays, holidays, and then also car maintenance, okay? So with those particular categories, or anything that comes up on a yearly basis, what you want to do, and I'm going to give you an example. So let's just say for Christmas, okay? Let's just say for Christmas, I want to spend $500, right? So I'm going to take that $500. Let's assume it's January the 1st. I'm going to take that $500 divided by the number of months in which I want to make a withdrawal. So I normally take my Christmas out in December because I do last minute shopping. I'm just not into all the holiday hoorah, okay? However, there's some people that love it and they may want to do Black Friday. So in that case, you would take 500 divided by November 11, whatever that total is, you take that total, jot it down. The next thing, let's just say you have a birthday trip planned, okay? Let's say your birthday's in June. So you want to spend $2,000 on your birthday. So you would take $2,000, let's say it's January, $2,000 divided by 6, June, whatever that total is, you put it off to the side. Let's just say car taxes. You have your car taxes. Mine are due in April. So I take that total amount divided by 4, and then I jot that down. So I keep doing that for everything that comes up on a yearly basis, and I put, itemize everything out, total everything up. Whatever that particular total is, I actually transfer that particular amount into my checkings account. I'm sorry, from my checkings account into my savings account on that at that primary bank. Okay, and I do it just like I'm paying a bill. So every month, I know that I have X amount that needs to go to the buffer account. I transfer it right over. And I promise you, once you get that buffer account down, it's gonna help you because everything will be accounted for. So like now for Christmas, I don't have to worry about, oh my God, I gotta scrap up some money for Christmas or be stressed out or anything. I'm just going to the ATM, hit withdrawal, and I have my money, okay? And I have my certain limit that I stick to with Christmas that's already there. And I can tell you, it's a good feeling when everything is already accounted for. So that's something that's gonna help you because it's gonna keep you in track. You want to make sure that you have that budget in place, okay? You do not wanna go in debt with things that come up on a yearly basis. These things are not surprises. And then the other thing is, once you take inventory of where you're at with your cash flow, you create a budget. The buffer account, of course, that's going to help you out tremendously. Doing the dual bank account method, that's going to help you tremendously. And then you want to make sure that you put in place a emergency fund account, okay? Emergency fund account is 3 to 6 months of whatever your monthly expenses are. So whatever you pay monthly, multiply that times 3 or 6, right? Whatever that total is, you want to transfer that amount into an emergency fund. I have my emergency fund in my money market account. Was actually split between my money market account that I have with my secondary bank, and then I also use a high yield savings account, okay, for the other half. So once you have these key things in place, that's going to allow you to save money. As far as once you get your cash flow, you're looking at your expenditures, you're either bringing in income or you're actually decreasing, okay? So when you're decreasing your expenses, I'm just going to tell you this, look into your car insurance. If you have car insurance, every 6 months you can shop around, see if you can get a lower rate. There is a website that's called EverQuotes. You can go there, get a consolidated total of different auto insurance carriers, and then you can choose. I actually was able to cut my auto insurance rate down monthly from like $96 to $59. So that was a savings there. Also, if you have any high interest rate credit cards, you can shop for 0% interest rate credit cards. You can go to a website called magnifymoney.com. Go on there and it's going to give you a different selection of whatever the cards are that's offering 0% interest on it. Be careful about the transfer fees because some of these cards are going to have like 3% transaction fees. So you have to make sure that it's really worth it. You know, the transfer is really worth it. So take inventory of where you're at, your cash flow, decrease expenses, increase your income if you can, and then also create a budget, okay? And of course, once you have all of those pieces working together for you, you're going to start being in control of your finances versus your finances being in control of you. So I hope those tips actually helped you, and I will be back with more tips.